Well, let's get across the market open. Mark Gardner joining us from MPC Markets. Mark, happy Monday to you.
Happy Monday indeed.
Very hard to keep track of what's going on with Trump's tariffs. What's the latest?
Well, the latest as of, just a few minutes ago, basically, he announced 50% tariffs June 1, I believe, on Friday night. That took the wind out of the sails of the market overall. He's also taken aim at Apple, which is a bit unique to be tariffing or effectively putting trade sanctions on a individual company rather than a country. But
well, I think he's done Samsung as well.
Samsung as well. Yeah. But I mean, even still, even though they're probably the size of a lot of small economies, very unique to be going after companies in particular. But this morning, 48 hours later, he's basically extended that deadline, which is his normal trick, out to July the 9th. So whilst we were down about 1% over on Friday night, we've largely recovered most of that in the futures on the open here this morning. So it won't be quite as dour as we thought. We do expect uranium stocks to be up quite considerably, with the uranium ETFs in the States up about 11%. After an executive order was signed on nuclear on Friday night as well.
So what's that amount to?
What's that? The 11?
The uranium.
The details I'm not necessarily across. I haven't really done the deep dive, but essentially it expands nuclear power for data centres in particular, and which we always sort of knew that was basically going to be the long-term solution, because you need baseload electricity for those things. Renewables do not work, and there was a small chance that they were going to use excess gas potentially in Texas, because that's where they were going to build some of their data centres. But obviously this expands it out. So the likes of Cameco were up about 11%. The ETF was up on around about 11% as well. So we'll probably see that be the brightest spot on the day for the Australian market.
Yeah, I was just looking, in fact, that executive order looking to quadruple domestic production of nuclear power in the States.
Yeah, we had an agreement from 50 odd nations, which was about 2/3 of the world GDP about 8 months ago, basically promising to triple nuclear power. So it's not really new news, but obviously it just might give... uranium stocks have been under a lot of pressure. They're deeply undervalued here at the moment. So, I think that probably maybe gives them the floor that they needed. But also an article in the Fin Review today about China hunting around for Australian lithium assets as well. So those two sectors have been really under the pump lately. We might actually start to see a little bit of a floor put in both of them, and that's both of those sectors start to settle down a little bit.
All right. Look, another sector that is very much back, that safe haven flows into gold. How are you playing that one at the moment? Yeah,
we bought back into Newmont a couple of weeks ago, around about the 78, 79 mark. Newmont being the most leveraged to the upside. They don't have a hedge. They've got a company policy on that. Look, Trump obviously, went on his PR tour around the world. Apparently solved world peace, did loads of trade deals, which none of them are actually really signed off yet, except for a couple. But and then sticking his head up and threatening not only a couple of companies, well, very large companies, and a block of countries. Again, people are just starting to realise that there's really elevated levels here, which is, we're talking 4% from record highs again. That this is probably a good place to be getting, to be selling, not to be buying, because he can basically do anything. We've seen him do anything. We've had incredible volatility, and he just popped his head up again in a negative tone, and I think people are probably going to start to see where we sit in the range relative is probably far more on the sell side than the buy side.
Yeah, nonetheless, just underscores that extreme uncertainty, because as you say, anything could happen.
Yeah, absolutely, anything can happen. It's 48-hour turnaround. It's sort of bordering on insanity, but it is the world we live in right now. So he's trying to hustle to get a lot of deals done to obviously solve that US debt problem, which he could have solved by probably not giving tax cuts to the top 1%, but still he added $400 billion per annum to the debt, so he's got to find some savings elsewhere, and it looks like it'll be tariffs.
Locally then, Mark, any other sort of sectors or stocks you're watching at the moment?
Yeah, Elders reports this morning have had a very, very limited look at it so far, but the numbers look pretty good so far. That's on the back of the Grain Corp results being pretty good as well. That agriculture sector being sitting at pretty deep value at the moment, and very unloved as well. But again, I haven't gone into great detail on it. I think it came out just as we come onto air. So, but probably expecting a bounce there at some stage, given the increase in some of the profits and revenue there.
Overall, how are you seeing the valuations here locally on the market?
It's very patchy overall. There's certain sectors that are very, very undervalued. There's certain sectors and stocks that are very overvalued. And at the moment, we're really returning to cash as it stands. And
what sort of level of cash have you got?
we'd be 30 to 40%, and we're back up to being around about 10% in gold miners again. And we'll probably just see how this plays out for the coming, particularly over the coming weeks. We've got payrolls will be probably the big dog in terms of economic numbers, and we do have the likes of Costco, Nvidia, and Salesforce reporting this week, which are pretty important results. Jensen announced over the weekend Blackwell chips for China, or a modified version of. So I think there'll be some buoyancy in that stock, leading into earnings. He's usually pretty good at doing the earnings reports, so that may hold the market up.